let's start with the question of today. I mean, the dollar front and center. What does the dollar need to keep rallying? We know that the likes of Goldman, who've shorted on the dollar, have since made an exit from that bet.
Hi, Haslinda. Good morning. Yes, the dollar index was largely unchanged this morning, and it seems like investors are not pricing in a very strong U.S. non-farm payroll report in March, which is pointing to a faster pace of recovery in the U.S. economy. And also data came last night showing that the U.S. ISM service PMI has reached the record high of 63.7. So another very strong data showing that the service sector is really gaining momentum. However, the dollar index has dropped quite a fair bit last night before bouncing back a little bit. I think there are still concerns about the coronavirus situations around the globe, especially in several emerging markets as well as parts of the EU, which are dampening the growth prospect across the globe. But in the medium term, I think a stronger U.S. recovery, a brighter prospect of earnings are likely to support the U.S. dollar index and weighing on emerging market assets.
Isn't it true, though, Margaret, that the greenback is still expensive versus its peers? And given the current account deficit that's likely to be sustained, I mean, the longer-term outlook for the dollar would be on the downside.
Mm-hmm. Yeah, that's a very good point. So U.S. has spent around 25% of the country's GDP on fiscal and monetary stimulus to cushion the slowdown in economic growth through the pandemic. And this is likely to widen further if Biden administration is going to approve the $2.25 trillion fiscal stimulus. And there's going to be tax hikes on corporates to fund the spending. So in the medium to long term, I think dollar is likely to go down, is likely to retreat from the current level. However, in the very short and medium term, I think pandemic situations in the EU and a slower pace of vaccine rollout in that region is leading the euro lower compared to the greenback, and thus supporting a short-term rally in the greenback. But in the long term, yes, I think the dollar may continue to go down. And also given that the Federal Reserve is very dovish in terms of the monetary policy guidance, and they are going to be very patient in tapering, in foreseeing that inflation hike is going to be a temporary and transitory phenomenon. So the long-term prospect for dollar is probably tilted to the downside.
Margaret, when we look at what's been going on with the bond market, at what point do you see more and more, or should I say, is there an inflection point where we see a lot more money coming into the dollar? What sort of yields would we have to get up to for that?
Yeah, the longer-term U.S. Treasury yield has been rising over the past few months, and that is attracted a lot of attention from retail and institutional investors. I think against the backdrop of monetary and fiscal stimulus, reflation optimisms, the longer-term yield are likely to continue its upward trajectory, even though that near-term selling pressure appears to be abated. And also the real yields are actually rising, means that the rise in nominal yields have surpassed the rise in inflation expectations. So this has actually dampened the prospect for precious metal prices. As we saw, gold, silver, platinum, they are not really performing in the past few months. I think these longer-term yields are going to continue to rise given a very strong U.S. economic recovery prospects and the impending fiscal stimulus. Back to you.
Margaret, in the foreign exchange space, we've got China creating its own digital currency. Does that have an impact on what happens globally with foreign exchanges, and does it affect the dollar's preeminence in any way?
Well, the state-led digital currency is in a very preliminary stage, and I don't see that causing a big impact to the current financial market yet.
Margaret, I want to take at the technology sector. I mean, those tech stocks rose overnight. I'm just wondering whether we've seen enough of a correction for tech to go higher from here.
Yes, I think the technology sector suffered a technical correction over the past few weeks, but the correction seems to be ending as we saw NASDAQ index rebounded very sharply over the last 4 trading sessions, and it is just slightly below its record highs. And we saw that over last night, the best performers among the S&P 500 indices, including Tesla, Facebook, Microsoft, all of these are technology names. So I think the tech sector, I think investors are buying the dips, taking advantage of the recent sell-off to accumulate more technology shares. And even though there are reflation hopes, I think the pandemic has profoundly changed consumers' behavior as people are more used to digital services like Zoom meeting, work from home, and other services like e-commerce. And it's really hard to change their habits back to the pre-COVID period. So earnings are likely to stay strong for technology firms in the months to come, and these are going to support a rally in the NASDAQ and probably those stocks in Hong Kong and Japan and Singapore as well.